Thank you for joining us today for Sprague's Market Brief. It's January 26, 2012. I'm Taylor Hudson, joined by Hugh McNaughton. So we're going to start with a bit of a news update. Big news yesterday was a Federal Reserve announcement. This really moved both the stock market and the commodities markets post-close. Hugh, I was wondering, what exactly did the Fed say yesterday?
Well, the impact of the Fed statement, and it was all due to that Fed surprise statement, that they would keep the current prevailing near zero interest rates all the way through late 2014, and that was a year later than was announced last November.
So why exactly is the Fed announcement that interest rates are going to stay low for a while, a bullish feature for the energy markets?
Well, there seem to be two. It's like a double-edged sword here. The first is that obviously low interest rates will encourage economic growth, enhance economic growth, and that will presumably improve over time demand. The second one, maybe more immediate, is the impact of a weaker dollar as a result of a looser monetary policy and its impact on commodities, including petroleum.
Do you think that the announcement had some legs even today?
Yeah, no question, Taylor. Last night it reversed basically a rather lackluster close after the settlement, and that powered its way straight through into this morning, especially after Asian and European equity markets responded favorably.
Now, also yesterday we got some DOE numbers out for last week. These were a little bit different than what folks had expected. Crude inventories actually rose 3.6 million barrels. We had lower refining runs. Refinery runs were off 1.5% instead of the 0.2% that were expected. Imports were a bit higher. Gasoline inventories dropped by 400,000 barrels. Again, lower refining output. And distillate inventories, while not a completely abnormal direction for this time of the year, perhaps given the weather, we wouldn't have expected such a large drop. But distillate inventories were off 2.5 million barrels, again on lower refining output. What we wanted to do for all of our guests today was give a little bit of a view of what the impact of these numbers still can be on some days. So if you look at the slide on the screen here, DOE impact, these are short-term intraday charts that show what the markets did after the announcement. These are 10-minute interval charts. And you can see on the left side of your screen a intraday number 2 oil chart. And I'm going to try to make this work. There we go. Got a little pointer here. About 10:30 a.m., the numbers came out. 2 oil was trading just under 301, and in 50 minutes' time had reached as high as just under 305, so a move of a mere 424 points. RBOB, after the announcement, the reaction there was the same, but actually stronger. We saw RBOB go from roughly 280 level to 285.56 at the high. And you can see the heating oil for the rest of the day tried to make lows and move off that DOE announcement, but RBOB really just kept the market higher. Hugh, I wondered if you could, for our listeners today, just sort of give an overall view. The DOE numbers come out every week. Sometimes the market pays attention, sometimes they don't. Overall, how do you think inventories look?
Well, just about whether the market pays attention or not, the fundamentals, unfortunately, from the standpoint of old-time fundamentalists, take second place to geopolitical or political or other economic and financial factors these days. That it's not surprising. However, the inventories at the present time show crude oil running near the top, and gasoline running near the top of historical ranges. Distillate is in the middle. Considering the relatively weak state of demand, certainly for gasoline, which is running at 10-year lows, and even for distillate, which excluding exports are at 3-year lows, the fact is it underscores the relatively ample supply that exists in the U.S. and for that matter globally. and that any supply and distribution concerns, or any supply and demand concerns, are projected ones.
Thank you. And certainly, I would assume that has something to do then with the overarching impact of concerns about Iran or stronger demand globally. While we don't see the supply tightness in the U.S., we just can't seem to escape this this story on a global basis.
Absolutely.
Okay, so the last question we want to answer is what do we think about tomorrow or the near-term direction? And you know what they say in weather forecasting, your best guess of tomorrow is more of the same of what happened today. So I think we would probably look at the charts right now and say there really hasn't been any chart damage done the last couple of days. So more of the same is probably expected. And in this case, we feel that we have to look at the gasoline chart as the leader in the complex. And unfortunately for the bears, the truth is that gasoline will just not give up making new highs. Yesterday we broke the January 18th high, and today we set a new high at 286.49. None of the moving averages have been broken or turned down or in jeopardy of being broken. So while the market may want to retreat and try to move back towards those support levels, there's just nothing, at least on the gasoline chart right now, that suggests the end is near to this move higher. On the distillate side, that gasoline strength is coming over and preventing heating oil from making new lows or getting below the moving average support levels as well. In the short term, we think that the market will probably look at the high set on the 17th of January at 309.37 as a likely first resistance point. Support will be provided by the 18-day moving average, which is currently just under 304. So when we made these charts, we were at 305.25, with on the bullish side another 4 cents higher. On the bearish side, first support at about 1 1.25 lower.
Okay, thank you, Taylor. And of course, to all our listeners, thank you as well. Feedback's always welcome, as you can see right up there on the slide, either at that telephone number or a brand new email address, markandtell@spragueenergy.com. Look forward to hearing from you, and have a good day.